This program is about what Alphabet stock is about to do for you. In 2017, you already knew all about Google. You used it yourself probably every day. You knew billions of other people relied on it also, and you probably had some idea that it was the most powerful medium on the planet. It was and still is a money printing machine. Now, who wouldn't want to own that great business? My name is Dan Frischberg. I'm an author and national financial media commentator. In over 40 years, I built a billion-dollar asset management company. And I spent my career making rich people richer. Now I'm retired and free to have the fun of doing what I always wanted to do. I teach regular people to make much more money than they do working by owning pieces of other people's businesses and using the high leverage acquisition techniques that billionaires use every day, but that most people never even heard of. That's why my latest book is called Now It's Your Turn. If Alphabet didn't turn $10,000 into $540,000 for you over the last 5 years, it's not your fault. It's just that nobody taught you how. But you're about to get another chance, and you don't have to miss it this time around. Right now, we have a confused Fed raising interest rates. We have rising inflation, and you can see a big stock market pullback that's already started, including Alphabet stock. Now, in a sane world, that stock would never go down. And that's exactly why Alphabet stock, the company that used to be called Google, can and will make you rich if you let it. Here's a picture of Alphabet. The stock has run up significantly. It's the pink is Alphabet. The green is the S&P 500 over time. But, well, it should have run up because it is right in the middle. When you want to build a business and you get any kind of consulting about how to build your business in this modern era where television is less important, but social media is very important, and reaching people, they're all searching on Google. And so what you're trying to do is get your name to come up. The biggest place to invest for advertising is Google. It's the strongest because it is the main place that people search when they want to know anything. If I wanted to know the long-term interest rate chart, how did I find it? I just go on Google and I search for it, and that's it. Now, the companies that want me to subscribe to them, they're spending a lot of money to come up first in Google. Bottom line, Google is the perfect advertising medium. Their expenses are very low compared to the amount of money they make, but the stock has actually started to come down a little bit. And if the Fed overdoes it like I think they're going to, if you look at what's happening, an 85% rise in profits this year. This is going to be driven by almost a 40% increase in revenues as the marketing customers come back and start to advertise again. Remember, there was a lot of advertising that stopped because a lot of businesses had to slow down. A lot of consumers were staying home. So every analysis of how to grow a modern business in this post-television world start with how to understand and use Google and make yourself come up on it. And now, with more companies joining the economy again and not being closed down, more restaurants, more hotels, more trips, more airlines, this is the tool the American economy uses to change the world. So what are those tools? Well, there's Amazon, of course, which is changing the world of retail, and Microsoft and Google. But see, Amazon doesn't really have the profit margin. That leaves Microsoft and Google. Most of us already own Microsoft, but let's compare Google and Microsoft. These are the two stocks over the last couple of years as they recovered from the big drop during the pandemic in the spring of 2020. Now look at Google, Alphabet. You see their revenues steadily increasing, and over the next couple of years, they're going to go up by another 50%. This is revenues per share. Cash flow almost doubling over that same period of time. Earnings going up by 50% over the next couple of years. Now, the bottom line is here, as the revenues grow, I want you to see that the operating margin here is 40%. And the reason I'm showing you that is to distinguish between Alphabet, which I want to buy, and Amazon, which is a dominant company changing the world. But look at the difference. Amazon's operating margin is 10 to 15%. Alphabet's operating margin is between 40 and 45%. So what's going to happen, in my opinion, is that you're going to get a tremendous opportunity to acquire Google. I'm waiting for it. I'm not buying it yet. But there's a very good chance that this stock comes down 10, 20, 30, 40%. I don't think that they're going to create a recession in the first half of the coming year, but there is undoubtedly going to be a sell-off somewhere in the 8, 10, 12, 15% range, much like we had in 2018 when Powell started to do exactly what he's doing now and talk about it exactly the same way. Now, here's the explanation I give every time I show you one of these great ideas that can't wait to make you rich. Why isn't everybody going to do this as the opportunity comes up? I want to show you the mistakes that keep most people from getting rich in the greatest economy in the history of the earth, when we all know about the unstoppable companies that are changing people's lives around the world. These are mistakes of the mind, not mistakes of the economy. That means they cost you nothing to change the way you think and change everything about your family's life forever by just using your brains and the courage or balls to manage by objective instead of by emotion. How can you help getting rich living in a country that invented almost everything? Just about all the really profitable companies are public, and they're making a fortune. So where are all the rich people? How do most investors keep from getting rich? They just plod along, diversifying, and maybe save up a little money when they're 80. Look, you're probably a customer of the company we just talked about. At least you're very familiar with them. You're a customer of MasterCard. And you know, in a previous video, right here on this channel, I showed you how Microsoft made anybody, not just us, anybody. It made 40 times your money in 3 years and 60 times your money in the last 5 years. You were a customer of the company then, and you still are. You knew enough about what they did, and you knew they were spreading all over the world. Now, 40 times your money means it turned $10,000 into $400,000. You're talking about changing lives of everybody you care about. Better schools, better homes for your family. This is not trivial. It's worth your time to learn how to do this. First of all, what's going wrong here for most people? It's how they think. In the short run, we don't see a company, we see a market of stocks. They're just paper to the average investor who's thinking about the market rather than owning a business. I'm going to show you how people think. And you know, a lot of good people are missing out when these companies are here making their owners rich. Maybe you've been missing out too. So this example will help. It's crucial that you get this, so please think about it. If you have to, stop the recording and play this part again. Now look, this is how all of us think when it's just a local business instead of a public company or a stock. If you own a plumbing business and the plumber down the street has a tax problem or he dies and his family's got to sell the business, if you got a report on the price of plumbing businesses, it looks like they were lower that day. But the plumber with a going business doesn't think about it that way, because those people selling cheap don't affect your business or his business in any way, because you had a great week this week and you made a lot of profit, and to you the company's valued at how much profit you make. Why do you see it that way? Because you understand the value of the company, the profitability of each transaction, the demand for plumbing, the number of people who might want a plumber. We call that the addressable market in your area. And how much money the business has earned for you, along with a forecast of how much business it's likely to do for you in the coming year or two. That's how you value the company. It isn't going to end up and down in your mind every day. It isn't going up and down in your mind every day, right? If I wanted to buy it from you, your only consideration would be how much income and profit are you giving up by selling that business. That's how you'd set the price. You don't care about that guy that had to sell. He didn't make your company worth less, did he? Now, the average stock speculator has no idea how much the company he invests in makes. He sees a commodity driven in the day, week, or month by the demand for the stock versus the supply of the stock. The profit the company makes isn't even a consideration. So, of course, these stupid decisions result in good or bad luck on any given day or week, just like a slot machine, not reliable investment returns. You want to buy the business because you heard plumbers make a lot of money. You don't know anything about the company, and the guy who owns it understands everything about it. So who do you think has the edge?